Hey, this is Tyler Garcia with Evergreen National Bank. Just coming to you real quick to make a short video explaining the 3 factors any lender is going to look at when determining your pre-approval or pre-qualification. Okay, so we've got the first factor is going to be credit. The second factor is going to be income. And the third factor is going to be assets. Now, depending on what company you decide to go with, those companies will have certain policies and procedures as to the minimum requirements for credit, income, and assets. As I was discussing before, depending on the company you go with, they will have certain policies and procedures in place that will have minimum requirements for income, credit, and assets. The federal government sets minimum requirements for income, credit, and assets, but anything that is stricter than what the federal government requires is what's called an overlay. These overlays are basically the law for that lender, and it basically says that you as the borrower need to meet these requirements, even though the government says that this is the minimum. We're saying that this is the minimum. Alrighty, so the first thing that a lender is going to look at is going to be your credit score. Okay, so the federal government comes in and says that the minimum requirement for a FHA, VA loan is going to be a 580, right? So that's going to be your federal minimum, okay? Now a company, as we were talking about before in the terms of overlays, can come through and say, we will only do loans for people on the FHA and VA side that have a 620. So those are those overlays we were talking about, and the federal minimum is a 580. However, most lenders will only do a loan to you if you've got a 620. The second thing any lender is going to look at is going to be your income. That's exactly what it sounds like, the money you bring in every month. Depending on how that money comes in is depending on how the lender is going to be able to calculate your income. If you're an hourly waged employee, it's really easy, pretty straightforward. However, if you're a tipped employee, commissioned employee, or self-employed borrower, it tends to be a little bit more complicated. The final thing any lender is going to look at to qualify you for a loan is going to be your assets. And what they mean by assets is basically money in the bank or in some kind of retirement account. It can be, gift funds from a family member in certain cases, but most of the time they want to see actual physical liquid money in your bank account or in some other form of account that is in your name that you have access to.